All right. So first of all, we are going to draw our structure. We're going to draw our structure. So let's get it straight. Using the 4 hours time frame with the way I explained it. Okay, this is our last external here that eventually got taken out. So let's check if the trend is bullish. Okay, it is. This is our external over here. 30 minutes time frame. I'll just really explain the few entries that we can get. So about the entry of price taking out a point of interest before buying. Okay, I'll be starting with that first. Now it can happen both in the external, it can also happen um internally, which is um what's the name? Inducement, disruption. It can also happen very external, which I said before now. It's simply like price. I think we all saw it. Price taking out a point of interest, and then now there are two ways you can enter it. When price takes out the point of interest, your entry can be here. Now, whatever entry you are using, you have to be mindful of your stop loss. Now, let's say you are entering directly from the low that got taken out. Okay, let's say you are entering directly, let's say this low. It means that what your SL has to be below this with a little more space. Okay, because this is your protected low. So it has to be below this with a little more space. Then if you cannot cover from here to here, it's very simple. You can use the 10 minutes or the 5 minute time frame to look for a demand zone, like the last bearish candle. Since it's an uptrend, the last bearish candle before series of bullish candle. Okay, so then your SL also should have to be like below the protected low, just like that. This is the high here, like this is where it is. This is where it goes to. This is where the demand was taken out, I think, externally. And then if we are entering from here, it means the SL have to be below this point. So if you are not, then your entry has to be the last bearish candle before series of bullish candle. I hope I'm audible. Okay. So the last we have is this guy here, which is this, and then SL has to still maintain that point below it. All you are doing is reducing your risk. That's all you are doing, because you must have checked, and then this is over 1, 2, 3, 5. So you must have checked, and you cannot actually put your entry here to this point quite far. So you are using, after that point has been taken out, you are using the last demand zone to buy again. Let's check another here to also see something like this. Let's check randomly. I'm trying to explain this particular entry. Okay. What's the trend here? Let's check 4 hours. So before you start analyzing, can I use 4 hours? Get your range first. But I might not be doing that right now because this I explained before that this synthetic, except if you're just like familiar with a pair, getting the ranges of that particular pair because they are not really giving you much more like. But this is an obvious downtrend in the higher time frame. So an obvious thing this book structure should be with the okay. So I yet to get a new strong high. The last that was created. So then I think we had this consolidation, a ranging market yet to break a high or low. But how can it be traded through the internals? That's how you can trade this one. So let's just add him. Let's put here the last high created and let's stop here 30 minutes. But you won't neglect the fact that it is not a strong point. You still have to keep that in mind. But you have to like follow up because you cannot keep waiting. Okay. This guy got taken out the same price still bought. You know why? So I'm still sold rather. You know why? No, this is the high. The highest high of that point. Then this look. So internally we have these and all of these as structural liquidity. Okay. So price is not giving us any significant movement for this pair because it's still consolidating. Let's check another pair. I think the one I was analyzing earlier today. Let me check the analysis on my phone. I think okay. For us first. The last point downtrend, but I think there's a disruption of internal order flow because obviously it can't be here. So 30 minutes or 1 hour. So I think there's a bullish, a bearish disruption, obviously, and then we expect buys. So now in this scenario where we have this, now so many people will want to buy from here. Why? Because of this and probably this structural liquidity that is will be engineering price. Good and fine, but one thing you should notice that when it comes to buying directly from inducement, there is no guarantee of a high probability setup. Everything you're taking is a risk. So if price takes out this low, it's better if price takes out the low and then taps on, just as I said before. Let's say the nearest point of interest demand zone here is this point. The nearest point of interest is this here. So how this should be that will be best for you is takes out this guy, taps on this, and then your own entry should be directly here if you can protect this low. If not, if you're not afraid of missing entries, then you go over to this point and then you buy from here. So whichever way you can buy. Give me a minute, please. So whichever way you can buy from here after this is taken out, like I said before, trading at inducement is not guaranteed, okay? Because that is liquidity. I explained liquidity to you before. That is liquidity. And then I said that it would have been better if this whole scenario happened at the disruption. This thing happened at the disruption. Then you would have taken it as the other entry model of sweep and break of structure. But for the fact that it happened at the inducement, just giving us this structural liquidity to engineer price, the nearest to this demand zone. So just best price takes it out because it's a point that looks like a good place for buys. So any obvious point that looks good for buys is can be used as trap. Okay, so and also a point of interest that a disruption that doesn't have a good sweep close to it can also be used as trap. Let's just say if your um your entry doesn't have this sweep of liquidity because structure one, then inducement below the 50% level. 50% level, I mean, inducement is not below like the discount point. I think I already explained premium and discount. Alright, yes, I guess. So the inducement is not below this point. Okay, you might consider, let's say the inducement is far away. The reason that it becomes risky if the inducement is far away is because remember I said that price is coming back to take out that inducement. So if the inducement is far away, if that trade should work out, you should rather take out the inducement and tap on the nearest demand that falls, that's nearest point of interest to the liquidity that falls directly at the discount zone, just as I explained in the other class, and then buy from there. Because if anything makes it, that is where the whole model of it takes out this guy and then he buys. It's not just buying, it tapped on something. Okay, is that thing that it tapped on. If you cannot spot it early, then you can enter it. This movement sef might not even go too far. It might just be here, just right above this, and then it might just be a little retracement like this, and then it activates. I think what setup was that I was explaining to somebody actually just gave a very little retracement above. Okay, let me just use this one as an example. Let me use 15 minutes. You'll see what I mean by it might just like be a very little. Okay, now let's use this as an example. Now, after Price took out this guy, it was just this little stuff up here that went above it. Sorry. So, the moment that happened, you can see that you either use directly at this guy as entry, or like I said before, this worked. Okay, and that was where it bought from. Now, there's what we call pullback candle. Now, what is a pullback candle? A pullback candle is just like a structural liquidity. It occurs directly at a demand. It gives a demand a high probability than the usual. How does this candle look like? It is one candle there, another candle above it, another candle above it here, and then another candle like this. This particular one, the color does not concern anybody. This is a practical example of a pullback candle. This candle here, this one is for sales. The color does not concern us. So whether this candle closes above the previous candle and the next one closes below it for sales, the next one closes below it again without touching the weaker body of this candle, like this. This candle closed below, another one closed above. This one is for buys, and another one closed above it. Now, without tampering with the wick or the body of this candle that closed below this one, now this particular candle becomes a pullback candle. This particular candle becomes a pullback candle because the movement is like this. If it was a lot of candles moving, then you would have been seeing them small candles working like this, and then it goes like it's still giving that your sweep method, and then like this, your demand zone. So whenever you see this candle, whether it is red or green, but it falls at the demand zone for buys, just take your entry there instead of any red candle you see. So whether it's at the extreme, if this was a valid POI, then this is it. I wouldn't choose, because saying that this color self, it doesn't matter, the color does not matter. I would just choose it even if it was red color, because why? The candle closed above the previous candle, the next candle closed below it, the next one closed below it as well, giving a gap in between. So this would be my entry. So even if this falls at this point, okay, with this one like this, I'm still going to take it. And that was where this whole stuff came out from. This will buy. Okay, the point of interest got taken out, and then we don't know what it tapped on because there is no um valid demand zone here. This is not a pullback candle because there is no space in between this third candle. This candle here, the wick has touched it, but assuming that the wick was not touching this one, then this is it, close below it, the next one close above, the next one close above this one without tampering with the wick or body of this one. So it's not, but then whether it tapped or anything here or not, it still falls in our category inducement that got taken out. If we're following the method of sweep, probably somebody would have said this is a sweep, but then this thing that happened here is better than the loss you would have taken if you were buying at this sweep, or I don't know, maybe if you were buying here or something. Maybe I should have been here. I don't really know. It just depends on how you SL people. You would have been out. So better off if it's an inducement or even a disruption that doesn't fit the characteristics of sweep, like it gives a major sweep of liquidity. Like sweep of liquidity, I mean, takes out an internal like this break structure, the inducement in between the 50% level, a retreat, a break of structure like this, and then you're buying from here. So you can as well buy, let me label this. Okay, let's call this A, B, and C. Okay, now A entry, if you see that pullback candle I tell you here or not, if you don't see it, then since this is an uptrend, the last bearish candle before the series of bullish candle can go as A. For B, the pullback candle as well here. If you don't see the pullback candle, since this is an uptrend, the last bearish candle before series of bullish candle 2 can go. Then C, this one is entry A or B is when it fits this criteria of taking out sweeping point of interest, breaking structure, retracement within the 50% level. Then C, do not enter directly, even if it has a sweep and a structural liquidity in front of it. Sometimes if you enter it goes well, you might want to keep trying it, and then that's when the main trap comes in. But all of this should be in line with the trend. Okay, no matter what, it should be in line with the trend. Stop seeing a downtrend and trying to buy. Price is moving down like this, and then that small movement that just goes up, it takes out inducement, not even disruption. You are putting your entry here to buy. It doesn't work that way. It doesn't work that way. You have to trade in line with the trend. If it is selling, it's better off to look for sales no matter how long it takes than to try to gamble to buy. The C, do not enter directly, even if it has a sweep and all of that. Allow price to take it out. If the inducement is a bit far away, then when it taps on any demand zone, enter once it retraces above. I told you that you yourself, you will know when that trade is gone. You cannot tell me that trade has gone like this because it have not tapped on either of your entries, but it has gone really far. Then it starts coming up above here, and you are thinking of buying from here. Just looking for problem. So save yourself the losses by having a clear rules why you should wait for price to take out a point of interest before you decide to buy. Okay, some setups can be taken when it's directly okay. So I'll be taking few questions. I think after this class, the next we should be having is risk management. I'll be combining the risk management with few tips to get confirmation to stack. But like I said, the stacking will not work if your analysis is wrong. It's just like saying that you are doing the wrong thing and then you want it to work. The stacking is just something to back up to open more positions. But that does not mean that what you are doing is wrong and then you want to now stack. It's not going to work because originally without stacking, if your analysis is correct, it's supposed to go well without stacking. So you will not say that you see the confirmation candle and then you bought, it started selling. It means that your analysis, first of all, is wrong because even the structural liquidity can show up anywhere. Doesn't mean that you have to trade them. Okay, inducements for buys can show while sell is going on. Doesn't mean that you have to buy. So if you're not in line with the structure, anything you do will fail. If you like get the most perfect entry. Alright, so let me take a few questions before we round up. Thank you. Just have to raise up your hands. I'll be taking just 5 questions. I won't be doing too much today because of my health. Thank you. Zeno, I muted you. Just have to raise up your hands and I will unmute you. The icon. I'm just unmuting people that are not talking. What's the problem?
Good evening. Can you hear me?
Yes, I'm listening.
Okay. I want to ask, is the net class also going to be on the top-down analysis?
What did you say?
I said, is the next class also going to be on top-down analysis?
That should be the last class. Yes. I will just take the 3 at once: risk management, few tips for stacking, confirmations, and top-down analysis. Yes.
Okay. Thank you.
Good evening, ma.
Good evening.
Yeah, you said something about the last 2 candles for that entry, that diagram you draw, that last example. But can you just show us the example of that last candle you were talking about?
Which candle is that?
Like the entry, like the
The
diagram you
pullback
draw. You said
candle.
if we are not entering from here, if it's not from the buy side, the last buy or the sell. Yeah, this example you gave. Yes, there's an go back to that diagram. That your last diagram.
Is
The
it
last
this
diagram
pullback
of the
candle?
class. Yeah, this one. You were saying yes, you were saying A. Can you just show us clearly very well on your charts?
On what? Where exactly?
Like you've done the diagram of the chart, like you said A, B, C. Can you just show us like like clearly very well?
Let me look for any setup that has sweep.
Okay.
This one has sweep, but it has not played out yet. Let me look for another one. Okay. Let me use this for an example. Now let's use this inducement here. This one as an example. Now this has a sweep. Let's assume that this is disruption low. What I was saying is that for A entry, just as this thing is a long week, 50% of this week can be classified as a demand zone. 50% of this week, like this, first of all. But let's assume that it's the pullback candle that is there. Then I said if the pullback candle is not there, you can use the last, since this is an uptrend, the last bearish candle before series of bullish candle. Like this one here
Okay.
now is the E. The last bearish candle before series of bullish candle is this one here. Okay.
Yeah.
So it's either A, B. Then let's say this is like the C. You have to wait for it to get taken out first before entering.
Okay.
Yeah. Any other question from any other person?
Good evening.
Evening.
Please, when can you do a top-down analysis or exactly show us any of the trades you have taken before now, like using all the approach you have shown us? Because all the time you have been drawing. Can you just use the chart to show us exactly all these things you have been doing over the course of this course?
I should do that's top down analysis now. We'll get to that. That's the last class. Like everything I've taught from the beginning, doing them again, isn't it?
Well, what about entries now? What about entries? Is it that you haven't gotten to entries for?
Uh-uh. Are you just coming?
I'm not just coming. I've been present in all the classes actually.
So since you came, have I explained entries or not?
Maybe you must have explained and I didn't get it right.
Okay. The previous video before this one, watch it and watch this particular video again. You get it right. If you don't get it right, then the top down analysis. Attend the class. Is that okay?
But can you show us any of the past trades you must have taken on synthetics, like what you did exactly and how you approached it?
That's the top down analysis now. If I start showing a full top down approach, it means that that is the top down analysis that we're talking about. It has to come last because that is like joining everything we have learned together.
most of the things you have been drawing, sorry, I hope I'm not interrupting. Most of the things you have been drawing, can you just be drawing it on the chart? Like using only those drawings, just like just as it's being said, is like a notebook something. But if you're using the chart, just be drawing it on the chart, it will be more explainable to most people here. But drawing it just with those part tools is just like a notebook stuff. As for me, it seems hard for me to really get it right. But I wish you can just be drawing all those things in the chart exactly.
Okay.
Thank you.
But I've been drawing it on the charts now. I usually give the template before drawing it for a more simplified understanding. This one I just drew now, this is on the charts now. I used to give an example. For the charts and trades I've taken before now, I'll try to get them before the next class. For now, like this week, I've not taken any trades, and I don't think I took any trade last week on Derive. I've not been feeling so well, so I'll try to get the previous ones, maybe like last month or thereabout, and I will explain them. It's that okay?
Okay, it's fine.
Right.
Sorry, can you hear me?
Yes.
So, I have like two questions. Am I audible, please? So you said when taking when taking an entry after the engagement, when the disruption, then you can start taking an entry. From this from the charts I'm seeing, I feel like the disruption low is already very far from entry position. Is it not far? Like I don't know if you are understanding me, but I feel like after an engagement and a disruption, you like trades would have gone very far. Entering after a disruption will feels a little bit too late for me. So I don't know.
Entering
If,
after a disruption has been taken out.
yeah, is it not too late? Is it like
What about entering
from these
after?
structures I'm seeing?
What about entering after the inducement has been taken out? There's nothing like too late though. But let's say you want to actually hurriedly trade after an inducement has been taken out.
So are you saying anything?
What do you say?
I said, are you saying anything? I didn't hear you. I didn't hear you. Sorry, come again.
I say that you can trade after the inducement has been taken out, 30 minutes time frame, as well as 15 too.
Okay. No problem. Thank you.
Okay, so we have to stop here.
Hello, ma.
Sorry.
Okay, I'm hearing you.
Ma, one last question, please. That diagram, that example you're showing now. I just want to show you something. Just show your screen back. Yeah, zoom in this place. You marked a zone.
Which place is that?
Yeah. This is your zone below it.
This
The
thing
demand
here.
zone. The demand zone. Yeah, okay. Yeah, ma, this move now, this one leg move that you told us. this inner structure now, the internal structure. Can I call it this first one now, the inducement, then this one, the displacement, the last place you draw your demand
Disruption.
zone?
No, this thing is structural liquidity. Are you listening to give an example?
Yes, displacement.
Disruption,
Okay,
not displace. I need to give an
okay,
example.
okay,
Hello, can you hear me?
okay, okay. I'm scrolling now.
Can you hear me?
Yeah, I'm hearing you.
Sorry, the pullback candle that you explained, though I got like the way you explained it, but like, can we like see it the way it is on the chart, like maybe like an example, like very clearly?
Okay, this is an example of pullback candle. I said the color doesn't matter. This is an example of pullback candle. This candle here. Let me try to zoom it very well. So this one, the characteristic is not complete. This third candle is supposed to go above this, but this particular candle is very long. So, but I think it was a short candle here. Compulsory, this one has to go above, and the wick doesn't have to touch this one, the wick or the body. Let's check for the one that looks. This would have been, but I think that this candle touched it. What the one for buys? I've seen a lot for sales. Okay, now this one here, this candle closed below this candle, the next candle closed above it, and the next candle closed above it without touching the wick or body of this candle. So that is it. Do you understand now?
Yes, yes, I understand.
Alright. So we have to stop here for
Mm.
today. So I'll be dropping the video right away. Please try to practice the things you've been taught, and you can send feedback to me. Okay. Whichever way it turns out, please get back to me. Thank you so much, and see you in the next class.